Your time is 2 p.m. and this is the Monday edition of Market View right here on Eswatini TV. I am Notele Sitole. Glad to have you on the program. Moving on the program today, local businesses have continuously raised concerns about their participation in large-scale development projects despite government's commitment to a private sector-led economy. And as the country implements its national development plan and pursues infrastructure-driven growth among other priority industries, today's conversation covers whether local enterprises are actually receiving a fair share of the economic opportunities. We will be exploring the importance of local business participation in national development and what more can be done to ensure economic growth benefits for, or rather, local MSMEs. This is a conversation we're going to have with in-house economist Sanele Sibia, who believes that as the country enters the phase of mega projects, the focus must shift from simply delivering infrastructure to ensuring that projects are completed on time, with quality, without cost overruns, and in a way that maximizes benefit for Eswatini. But first, our business news. Moving on to our business news, government is reviewing its procurement framework to create greater opportunities for local construction companies to participate in and benefit from major national projects. Speaking at the Construction Industry Council Stakeholders Forum held at the Happy Valley in Eswatini, the Minister for Public Works and Transport, Honorable Ndahla Ndwandwe, said government is committed to empowering local contractors, strengthening the construction sector and ensuring the national development directly benefits Eswatini's businesses and communities.
The Minister for Public Works and Transport says the Construction Industry Council is also reviewing its legislation to create more opportunities for local companies to participate in major infrastructure projects. He notes that while government is committed to empowering local contractors, some projects remain beyond its control as donor-funded initiatives often come with procurement conditions and technical requirements that must be met.
Ikakhulu ngitothe ukuthi imisebenzi lapha ekhaya itholwa bekuhamba kakhulu ingento yatholwa namaswati bagciselele kakhulu kuloko ukuthi cha vele leso sento ukuthi emaswati angede akhuthateka vele netinkampani emaswati kuyadilimata kakhulu kepha ke lokuhle kwakhona nakhona ngalapho uhulumende bekuyindzaba lekhulunyiswa le ngoba nako kuze kufikela ekuthenini ukhanze ukuthi sesibani bekuhamba la kusebenteni kuba imigomo lefaka ekhathi bona laba sinika letimali mhlambe nalokwa kepha ke akusho ukuthi lesikhalo semaswati nalokubona kwethu nje ukuthi imali nayitawuthwa bekuhamba yonke ukukhanya ukuthi umnotho level usasitakala indzaba vele uhulumende lasetukwayo inhlanhla ukuthi lokunye lebe kusilimata kunanomthetho wethu wekuthenga i-Procurement Act lokwakhanza ukuthi ayikasimeli kahle kulamalanga ke iyalungiswa nawona lo mthetho lo akasiyayisingana nawo so semaphethelweni kulungiswa.
Honorable Ndahla Ndwandwe says government remains steadfast in its commitment to supporting local industries. He says the ongoing reviews of procurement and industry legislation are designed to ensure that local companies are given a fair opportunity to participate in national development and are not left behind as the country implements major projects. Reporting, Nelson Dlangamandla, Vuminkosi Nzinisa, Ezulwini.
Government is opening up the poultry industry to empower more Eswatini farmers, expand local ownership and drive economic growth. The Minister for Commerce, Industry and Trade, Honorable Manqoba Khumalo, made the remarks during a tour of the 16 million Malangeni Aaron's Farm Produce Poultry Project at Eswatini, where he reaffirmed government's commitment to building a strong, competitive and inclusive agricultural sector.
The minister emphasizes that the poultry industry presents significant opportunities for job creation, import substitution and increased local production capacity. Honorable Manqoba Khumalo notes that investments such as Aaron's Farm Produce project demonstrate the potential of the private sector to drive innovation, expand production and contribute to national development goals when supported by the right policy framework.
Industry kwekuthi lokutawuyenta lokuthi sebenze le industry kwekuthi ibe inclusive uma ngabe sekuneswati lelento na ngom-70 nango alingasweli kwekuthi letinkukhu masetivuthiwe tiyawumikiswa kuphi kungabe sekufakwa imicabo lokhanza kwekuthi asakhona nekuqhubeka Dlamini asebenze ngoba mhlawumbe sekukhona lo valile ukuthi awutinkukhu takho Dlamini siyathatha ngaDisemba ahlale Dlamini nestructure lesihle kangaka ngoba solokude losithathayo lokho ke sicilikele kakhulu lokutakwa nje lapha I'm sending a message ukuthi vele le industry sifuna kuyivula ukuthi eMaswati la necapacity akhone kwenda lo msebenzi.
Aaron Dlamini, founder of Aaron's Farm Produce, says he has been in the poultry business for 26 years, starting with just 7,500 chickens. He now says the farm is expanding to manage over 60,000 chickens in this new infrastructure. He says the growth has created jobs with 8 people employed full-time and more are going to be hired during peak seasons. He continues to add that the expansion supports local production and economic development. Honorable Manqoba Khumalo adds that strengthening local production will also help keep more value within the domestic economy and ensure local businesses have a share in the market. Reporting, Nelson Ngamandla, Vuminkosi Nzinisa, Eswatini.
And you're up to date with some of the latest in business. After the break, we speak to in-house economist Sanele Sibia.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
Welcome back, and moving on to the program. As the country enters a phase of mega projects, the focus must shift to more than just delivery. It must be about doing things right, on time and with lasting impact. These sentiments are shared by economist Sanele Sibiya. But how does government ensure projects are completed on schedule with quality and without cost overruns? And how does government again create a space for local contractors to be meaningfully included, developed and empowered, not just as subcontractors at the periphery, but as core participants in national development? It is time to recalibrate the construction ecosystem so that government projects do not only result in infrastructure, but also deliver broader economic multiplier effects, including job creation, skills transfer, industry development, and stronger local ownership of growth. And Sanele Sibiya joins us now to speak more on this topic. Mr. Sibiya, good afternoon. Thank you very much for your time. So government has multiple times said that the private sector is expected to drive economic growth under the National Development Plan of 2023 to 2028. Yet, of course, local businesses continue to complain that they are spectators rather than just beneficiaries. Where is the disconnect?
Thank you, Notsile. Good afternoon to you, good afternoon to the viewers. So what do we see more especially when we come into the era of mega projects, Notsile, is the issue of balancing capability with delivery. So you find that when we talk of mega projects, the matrix that are required for a company to be awarded such a tender run into the billions of emalangeni. We expect companies to show that they do have that financial capability, and they also have the skills and the technical know-how and the machinery to actually deliver this program, this project, and on time. So that's where we are seeing the disconnect, where the locals really just fall through the cracks in the bidding process, and that is where we need to beef up as a country and come up with a model that can say, whenever we are building a big infrastructure project, the local companies need to get a stake of that, and we also need to ensure that they also develop the skills and they create the financial trail to say that these are projects that they can deliver.
So on one hand, we do have the issue of capacity. On the other, there is
actually handled this much before, and then you find that at times, where are you going to get that if government is not giving you that? Now that is where we expect a middle ground to be reached as independents. If you can find a middle ground where government says, I am going to have so much for locals, so that they build this capacity and they build this track record and this proof of concept that we've been given these projects before and we have delivered. So I think that's where we've been missing it, where we've always looked at the matrix and we've never really sat down to ask, why are the locals not participating in this value chain? That's because, precisely as you've pointed it out, they are not getting these big projects because on paper probably they will not qualify to even bid for such a tender because of the requirements that are there. So we need to make sure that as a country we are working towards ensuring that those requirements do not stifle the private sector in itself, and they actually allow, we need to think of it as a growth catalyst, where we're saying, in as much as we are growing companies and growing businesses and we want to deliver a road or whatever infrastructure project that we want to deliver, but we have to do it in a way that it somehow supports and uplifts locals to a level where in future you'd find probably an entire mega project of 7 billion being awarded to a local company. But until and unless government takes those deliberate actions to say, you know what, I'm going to award these much tenders to locals so that they bid and eventually they can have the proof of concept to say we can deliver. Because we have to think of it not only within the local spectrum, we also have to think of it in terms of bidding for international tenders. If we are assisting the local companies to build this track record and show that they can actually deliver big projects, then we would be well on our way to growing a construction industry. It's not only going to thrive domestically, but it's also going to thrive regionally and eventually in the longer term globally.
Here's a scenario. Government is willing to offer or table amount X for a particular project. At the same time, there is the issue of constantly delayed supplier payments. Give local MSMEs a reason to actually want to see a particular project through, especially given that government does have not the best of reputation when it comes to paying suppliers on time. Is it realistic of government to expect MSMEs to participate in local economic development while at the same time they don't often deliver on their promise, they don't pay suppliers on time?
That's where the reform needs to come in as well, Notsile. You need to ensure that when you are reforming the entire architecture, you need to ensure that government would also be held accountable, or you need to make sure that government pays on time, because now that kills, the multiplier effect of these mega projects that we are championing as a country. So if you have a supplier that's going to be off field because they haven't gotten paid, then that means there is money that is not circulating yet. That is what we take into account when we come up with these growth forecasts and all of the inflation forecasts, quite a number of these jobs numbers. When you expect the infrastructure to drive growth to a certain level. And then in terms of the payments, I think we cannot overstate this more than enough. Government needs to ensure that, when you are fielding a project, the funds are there, you expect payments to occur within a reasonable period of time. That's usually 90 days at worst, where you would want to make sure that the payment has been effected and it's been paid. The commerce continues to revolve that money, and they continue to cycle that money through the economy. So now that's where we need to think around the recalibration in terms of this entire ecosystem, to say not only do we want locals to participate, but we want locals to be paid on time, so that we get the right multiplier effect to get the money to circulate in the economy the way it would have been projected at planning phases. So for that to happen, what is required is for government to also come up and state that they are going to pay on time, because when government doesn't pay on time, it is just equivalent to government taking a subsidy from the private sector, which is not tenable. We can't have the private sector subsidizing government, so we need to work on that.
Seeing as we do have faith in the private sector-led growth, what do you make of a case where there is legally forcible local content threshold requiring that a specific percentage of every major public project be executed by Eswatini-owned businesses?
Now that is part of the affirmative action that we expect to see coming out, in the short to medium term. Right now, we do know that there is a threshold of around 30%, but whether that is enforceable or not, now that is the issue that we have to contend with, and that's what we have to address as a country. Make sure that whenever we field a contract out there, there is that 30% that's going to remain for local businesses to actually take it up. And in the event that local businesses cannot take it up, we need to ensure that there are clear guidelines and clear parameters to say we are not involving locals because they are not meeting this certain threshold. And over and above that, we don't have to just say they are not meeting a certain threshold. We need to think of ways of getting them to actually meet that threshold. That is what remains quite imperative. Not only do we want our locals to participate, and not only do we want to have an academic reason why they are not participating, but we also need to constantly and consistently work in addressing those bottlenecks that are preventing locals from participating in these mega projects. And I always say mega projects, not a certain the direct transfer of government funds to certain pockets, because when you look at it, you might say it's been transferred to a company, it's been transferred to, but beyond the company, there are shareholders, there are people. So we have to really think long and hard about it as a kingdom and make sure that we transfer that money to a broader population compared to a select few. And worst case scenario is you're actually transferring the money to external parties, and you get the money repatriated, and that minimizes the multiplier effect from such projects. So it is quite imperative that we work on including locals as a country, and at times it may also require that we address those problems. At times we go through it knowing that we are not going to meet this certain criterion, but what then do we do about it when we get to that point? What are we saying to ensure that locals can actually have the capacity? How do we build the capacity? Because capacity building, not more especially when you have this huge financial barrier, it has to be a deliberate effort by government, where we're saying we are going to take a risk on our locals, and this is how we are going to structure the contracts so that it minimizes risks on both sides. So you need to think around all of those issues. How do you give the locals a slice of the cake, but how do you protect the fiscal purse as well? So now those are things that can be solved by contractual arrangements that make it punitive, and payment terms that are released probably on terms and upon finishing of a certain a milestone instead of a blanket contract. So we need to think long and hard about it and reconfigure the entire architecture of our public bidding process and the public award contract.
Fair enough, Mrs. Beer, let's leave you here for now. I'll see you in a moment for Marcus. That was in-house economist and Leslie Beer just talking to us about how government can recalibrate the construction ecosystem in order for local MSMEs to benefit from some of the mega projects going on in the country. Our market analysis coming up right after this.
Those that are in pain must forget all the problems they have. Because the things of the earth have got no answer. But the answer that we have is all morning. When I'm preaching here, I'm preaching to myself. I receive the Holy Spirit.
I declare that a turnaround is coming my way.
Turnaround is coming in my life.
We're still with economist Leslie Beer for Market Insights. Mrs. Beer, welcome back. So in terms of markets, U.S. tariffs are back in focus again. How are markets shaping up this first trading day for the week?
Thank you, Notsile. So yeah, we're seeing a lot of lagging activity in markets as we wait for the U.S. to come back from the long holiday, from the long weekend. So as markets are going to open later on in the day, now that's going to give us an indication of what the U.S. markets are going to be factoring in. But overall, what we are seeing, markets basically on a rather jovial or mixed mood, given those factors that you've actually just accounted, tipped on in terms of, the tariffs, and then also there are issues to do with over valuation fears around AI. So those still persists in markets, and overall we we are seeing positive movements in markets, given the fact that we are seeing that ceasefire deal continuing to hold, and the energy fears are somewhat, dissipating out of markets. So now what we are seeing happening, we're seeing is starting in the Europe this time around, because the US is on holiday. So with the FTSE 100, we can see that the FTSE 100 is down 22.27 points. Now that's largely driven by the volatility in heavy metals, and also the relative strengthening of the dollar early in the morning after we saw the release of the jobs data in the US. And then in Germany, Germany continues to fare above the 25,000 mark, up 16.14 points in today's trade, and Paris is back on that all-time record high of 8,500, just up 7.7 points in today's trade. Now that's largely driven by the overall optimism that we are seeing coming through from the energy markets. But and then as well, also we are just waiting to see what the Feds are going to detail today in their this week in their meeting regarding the policy path that we should expect in the next meeting or so. And then coming into the Nikkei in Asia, the Nikkei is down to that 69,000 mark, losing some 6.38 points in today's trade. And that's because we're just waiting for cues to come out of Washington. The Nikkei tends to mirror Washington quite a lot, and mostly because the issue around the overvaluation fears within the AI stocks continue to haunt markets globally. And what we're seeing there as well is Japan still battling with the overall weakness of the Japanese yen, and we're seeing it really just taking hammering today in markets, the yen that is, even also against the lilangeni. So we're seeing those dynamics that Japan has to contend with, but we're still remaining on a relatively strong footing at 69,000. And then in Hang Seng, we're seeing just a rebound to the 23,000 mark. Now what you notice with Hang Seng is we remain subdued. We're at the 25,000 mark a couple of weeks ago, and we've lost that overall almost 2,000 in terms of all share volumes. Now it's because of the structural issues that are coming out of Hong Kong, and the issue of the overall valuation of the tech stocks also continues to haunt that. So we're waiting to see what kind of stimulus is going to come out of the mainland and also in Hong Kong to actually just build stock markets back up again. We're seeing Shanghai, staying steady above the 4,000 mark, but losing 2.41 points in today's trade. Again, those structural inefficiencies within those structural problems that we are seeing within the mainland and also in Hong Kong. Coming into Johannesburg, the Johannesburg Stock Exchange is down 371.91 points in today's trade, largely being pulled down by the miners. Overall, we're seeing the miners not really performing very well. But what we are seeing, and we're getting a bit, we're looking into overall about the Johannesburg Stock Exchange, is the fact that we were sitting at 120,000 level a couple of weeks ago before the war, and now we are just at the 110,000 mark. So that means, in as much as we are seeing the energy fears dissipating out of markets, the miners continue to pull the Johannesburg Stock Exchange down to that level. And then also, the structural issues, more especially with the Mabahambe chance. So markets are watching that eagerly and waiting for the policy action to come out of that. And then in Eswatini, we remain on the very same 105.25 in all share volumes. And in terms of gold, gold remains subdued below the $4,500 per ounce mark. And also with the dissipation of the geopolitical tensions, gold really is suffering, and we are seeing central banks just taking a halt on their purchasing and their buying of gold reserves. So the price remains relatively high, but by recent standards, it is showing signs of being subdued. In terms of the price of Brent crude oil still hovering around the $72 per barrel mark. Just showing signs of the market still trying to read really what is going to be happening there. And we've seen just a bit of news around some tensions between Russia and the UK, so that that somehow sends the markets on edge. In terms of the Lilangeni, we are on a relatively stronger footing against all currencies today. We are sitting at 16.21 against the dollar, 18.52 against the euro, and 10.01 against the Japanese yen. Thank you, Notsele.
Thank you, Mr. Spear. That was economist analyst Spear coming through with market insights. This has been the Monday edition of Market View right here on Eswatini TV. From myself and the team, thank you for your company. Let's meet again next time. Bye-bye.